I believe that you guys are doing great. If you're watching me this afternoon, I would like you to quickly type in the comment section, introduce your name, and let me know where you're watching me from. Once again, my name is Bala Francis, and I'm bringing to you my daily top-down analysis process for the dollar foreign currency. Okay, so if you're in here, I would like you to type in. It was interesting to see that price actually, followed exactly the call we had yesterday. Price played out according to script. So we're about to go through all of that trade call yesterday and why we see the dollar trading lower, and it actually did as forecasted yesterday. The dollar traded bearishly while foreign currencies traded higher. So we're going to look at all of that today and study why price action did what it did yesterday. Okay, so type your name. If you have any inquiries, also you can drop it in the comment section. I'm actually looking at all of it and I attend to it. So if you have inquiries, drop it in the comment section. Let me know what your inquiries are so that I can go through them. Okay, so yesterday we actually forecasted we wanted to sell the dollar bearish, and the dollar actually traded bearish, even though those of you who must have taken the entry and had a very tight stop loss must have been taken out. I'm very sure a lot of you must have been taken out because of the tight stop loss. However, this guy still traded lower, and the reason for this sell yesterday, I remember, was order block right there, or the bearish mitigation block. The dollar rebalanced that liquidity void, traded into that area and started to fall. So we're looking at this guy selling. Okay, and we've seen the dollar on the daily time frame created bearish order block. The large buy candle there that was traded through by sell candle, that is a bearish order block right there. See how price action opened and traded into that bearish order block and started to sell throughout yesterday. So we went down to the 1 hour time frame to frame the specific trade setup we're looking at on the 1 hour time frame, because that's the time frame we're looking to frame our day trading setup most of the times. Okay guys, so that is where we're looking to frame the time frame, the setup for day trading on the 1 hour time frame. So we went to the 1 hour time frame and we've seen how this guy traded into that internal range fair value, created that displacement, again traded into the internal range bearish breaker because price took out the high, created shift of structure, traded into the bearish breaker and created another displacement with another bearish breaker right here. So we were interested in selling the dollar at the bearish breaker into the drawn liquidity, the relative lows below, all of the low resistance liquidity areas there. Also that old low on the weekly and the daily time frame was what we're looking at, and the dollar has been selling. This guy has been selling. All right, so today being Wednesday, what are we looking at? We simply want to see price trade into internal range inefficiency, and we reposition new sales into the next. So already we have a fair value gap here. Price has traded into that fair value gap and created another displacement with a bearish order block. So I would like to sell the dollar, continue the sell on the dollar while we're buying the foreign currency, the euro and the GBPUSD. I think all our trade calls yesterday actually played out. Even the one on gold played out. So Euro USD was a buy yesterday. We bought Euro USD because of the cracking correlation. You see that the time that price created a lower low on the euro dollar, the DXY created a higher high. And while we were waiting for the DXY to trade into the internal range bullish breaker, the euro dollar also traded into that area. And that was a buy, stop loss below that low, and price has delivered as well. We are looking at the Euro USD trading into the drawn liquidity, the equal lows right above there. That will be the drawn liquidity for me, the relative equal lows there as well. So today, price has created that expansion and is reacting off that fair value gap right there. All right, so we would like to see price continue the buy from the fair value into the next draw on liquidity. At the same time yesterday, the GBPUSD created that cracking correlation. At the time here, we didn't see the GBPUSD create a lower low. At the time the dollar was forming higher high, euro created lower low. The DXY didn't create that lower low here. So at the same time, we had another cracking correlation. Because look at the GBPUSD creating a lower low here, right here, sweeping that relative equal low, but we didn't see. You see that the Euro USD didn't create lower low. At the same time, the GBP USD didn't create higher high right here. So you see how institutions intertwined the appearance of that cracking correlation, differently. This time around, we see it happening on the GBP USD. So that is why most times I tell the mentorship students that cracking correlations can happen anytime on any currency pair. So you don't know which of it specifically is going to sponsor the cracking correlation. It's going to print out that smart money fingerprint, but you should be able to train your eyes to see these things regardless. Okay, you should be able to train your eyes to see these things. So that being said, the next is gold. Let's look at gold. And yesterday we called a bullish gold. Unfortunately, I was looking at gold trading into that fair value below before I take a buy. Unfortunately, really, gold didn't do that, although it's still respected. It created a 15-minute displacement. All right, and gold has delivered massive peep in delivery. Look at what gold did. Took out that low. I was looking at that fair value, the bearish with the bullish order block below. Gold didn't trade into that area, and instead gold created that displacement shift in market structure bullish, that fair value gap with an old high in between. That is IOFED. That will have been an entry for gold alternatively because of that change in market structure right there, and gold has been bullish. So still gold is bullish because you look at the higher time frame, it lets you know what gold is doing. So we are looking at gold, if you look at the weekly time frame, it gives you more insight. You see the weekly is bullish and we're attacking the next drawn liquidity, that old high there. So we rather want to stick with the weekly time frame, is saying, because the higher time frames, that is where the main driver is. Pay attention to the higher time frame, and it's gonna save you from a lot of losing streaks. So right now, I will want to see gold trade into that fair value right there. You see that with the bullish order block, that bullish order block, that fair value gap, with that fair value gap there. I'd like to see it tap into that area, and I'll be looking for confirmatory signatures to still buy gold into the next drawn liquidity. Of course, we are looking at that old high there as the draw liquidity for gold. This is my perspective for the dollar and the foreign currency. Guys, it's really amazing. Lately I'm beginning to see that nobody does anything successfully without first getting the knowledge required to navigate the industry that you're doing business in. So we keep learning every single day from the market. The market is a school teacher. It's going to teach you directly, it's going to teach you indirectly, it's going to teach you, a lot of things, even about yourself. The market will help you learn a lot about yourself. Yesterday, I was teaching the students and I was letting them know that It requires a high level patience to become a trader, because as a trader, patience is required for you to learn. Patience is required for you to identify high probability trade setup. Patience is required for those setups to get ready. Patience is required for you during the trade. When the trade is already on, you need to stay patient, to see the outcome. Either price takes you to stop loss when you're wrong, or takes you to take profit when you're right. All of this requires a high level patience. So trading is a game of high level of patience. All right, those who do better in trading are those who are able to master the discipline, to inculcate that discipline to becoming better traders day in, day out. And of course, you would see the outcome on. Okay, so never forget, this is Bala Francis. You can follow me on this YouTube handle. Make sure you are subscribed to this channel, like the video, share the video, and you can join us on the mentorship community, the EliteTradersProgram.com. Just go to your browser and search EliteTradersProgram.com. Myself and Solomon King have prepared a detailed mentorship program for beginner, intermediate to advanced traders. If you're looking to join the community of traders where you have access to mentoring, and also you get to learn from us almost 3 times every single week, this is the program you should be going for. Just scroll down and sign up for any of the courses. Either the Elite Traders, which is a Forex program, or the Sniper strategy for Nasdaq US 30 and S&P 500. I was the one who could strategy, and as well, of course, the Forex Elite Traders program. Get to read our reviews from our students and all of that before you get to sign up. Okay, mentorship is wisdom without pain. It's going to save you a lot of pain without necessarily experiencing it. Okay, a lot of people learn from the pain that the market impacts on them, rather than learning on the wisdom of their leaders or their mentors. Then if you are looking for one-on-one mentorship, check the link on the description of the video and reach out to me. I'm going to enroll you for a private one-on-one mentorship session.